You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I have Jeff Yaede on the line. He's the founder and lead trader of TraderMinute. Jeff is a former hedge fund manager, and he started at TraderMinute in 2012. Jeff, thanks for joining us on the show today. How are you doing on this Wednesday morning?
Doing well. Great to be with you here, Brianna.
Is your take on the broader market right now?
Broader market has pretty much been the same as what we've had for the last few years, where occasionally we get a little bit of a catalyst for a small sell-off, and then that catalyst kind of goes away, and we see everything recover back to new highs. And we've seen that over the last couple weeks, a little pullback with Greece. I know Greece isn't solved or that issue isn't over, but we've seen almost in the last 3 days this kind of V-shaped snapback and rebound, that we've been kind of dealing with for the last several years. We're not really out of any major sort of range. We're not in any sort of major breakout. The market still has various issues with it, but there's just not a collective kind of consensus to sell. And we continue to see pockets of strength in the market that, while maybe the rest of the market might be weak or overvalued, those pockets continue to keep the broader indexes higher.
We're approaching the heart of earnings season, and before we got live on the show, you had mentioned that you were looking at some of the railroads. Of course, we got CSX earnings last night, EPS of 56 cents versus a 53-cent estimate, so they did get a beat, but they did mention that they were looking at the upper end of fiscal 2015 as more of a challenge given current energy environment. What's your take on CSX right now?
Yeah, I'm not a big trader in CSX. I don't trade it very often, but it's one of my favorite earnings reports to look at as we head into earnings season. And one of the reasons being is they just have their fingers in so many pieces of the U.S. economy. Mm-hmm. And so as they talk, some of the numbers here and some of the reasons they're talking about challenging or a challenge hitting the high end of estimates has to do with the energy sector. And they're still not seeing any sort of major kind of shift or turn there. They still have the same old issues with coal. I believe they're expecting coal shipments to decline another 10% here, which, continues to bode pretty bearish for the coal sector. But with those headwinds, right, with those kind of issues, they're still able to hit some of their earnings. They're getting some really nice breaks in terms of fuel and fuel savings there. And to me, it seems like a very similar report to what we saw in April on CSX. Mm-hmm. And April, we saw this kind of report, and we saw the stock, just fly higher. There's nothing in the report that I go, man, this is super exciting, but the price action, the trading action on it, I would be surprised if we don't see a really nice jump in the stock. I would like to see what UNP has to say here, Union Pacific here, if they corroborate some of the things we're seeing from CSX. But I think it bodes well here for the U.S. economy and kind of goes right along with some of the stuff Janet Yellen has been saying in terms of expecting a second quarter economic pickup.
What about the broader transport sector as a whole? What are you seeing in that right now?
Yeah, it's been talked about over and over in a lot of the news and media circles that transport's lagging. So, transport's lag, market's going to fall type thing. We really haven't seen that. The transports were overheated, pretty much kind of going into this year. They've been one of the top performing sectors. And now we've gotten a pullback about 1,000 points, a little over 1,000 points on the Dow Jones Transportation Index. A lot of that has come from the railroads and the airlines, both areas which were huge outperformers in 2014. And so is this a sign of some sort of cyclical downturn, or is this just some profit taking in the sector waiting for some of the earnings to catch up? I still think it's more of a profit taking waiting for some of the earnings to catch up, as it was a little overheated. I think the transports need a little bit more of a breakdown in them from an earnings standpoint to say, hey, this is emblematic of a market that's ready to fall off a cliff. But I really think this earnings period is going to be very interesting for the transports. Can the earnings catch up? And if they do, I think we're talking about the second half of this year as transports being one of the big outperformers. If not, if we don't see the earnings catch up, we're probably going to be looking at transports continuing their 2015 downward trend here.
Airliners have also been an interesting sector to watch. Delta Airlines reported, and they get, EPS of $1.27 versus $1.21 estimates. Sales also a beat, but they kind of guided lower, saying they were seeing Q3 unit sales down, system capacity also kind of down. It looks like the stock is also trading down in the pre-market here. What are you looking at, or how does Delta Airlines look to you?
I went through that earnings report here, and I'm very encouraged by the report. Now, the stock's a little overheated in the short term here, and they did kind of guide down a little, but they're still expecting almost 30% growth. When you're looking at this market and you're looking at places for growth, I mean, these airlines have some of the best growth. One of the biggest concerns, Southwest, a while back, basically said that airlines are willing to sacrifice profits for revenue. And so in these earnings, are we going to see that? The best airline across the board here has been Alaska Airlines, ALK.
Yeah.
And it's been able to take any and every bad news piece and go and continue higher. I just noted Delta here this morning is it's going to be on my buy radar this quarter, but after a little bit of a pullback, to see them sell this quarter just because of that guidance and just because of some of the things we've seen from the major airlines in the last 3 months, I wouldn't be surprised to see Delta sell off another 3 to 5% from here. But I think that becomes a very nice buy opportunity with a company that has some pretty strong growth and, whose growth drivers aren't going anywhere. I mean, oil's not going significantly higher here with all the headwinds out there, and we still see some nice growth in terms of profit growth out of Delta Airlines.
Yeah, absolutely. We've also gotten a few big bank earnings. We got JP Morgan, Wells Fargo earlier this week. And then we also got Bank of America this morning. They did report a EPS beat for Q2. Overall, it looked like it was a pretty good report. Did you get a chance to take a look at that this morning as well?
I did. I thought amazing to see, what a Bank of America quarter can look like without the government highly involved.
Right.
Exactly. Because they've been one of the worst reports for the last little while, the last few years, just simply because of all the government involvement. So you take some of that out, and it's a big beat. When I look at the bank earnings across the board, I mean, the banks, they all move together up and down with the macro variables. But which ones are going to be outperformers, which ones are going to be underperformers? And I think one of the things that we've seen is Wells Fargo has been a nice outperformer over the last quarter. Like looking at the Wells Fargo report, looking at the Bank of America report, I think when banks rise, we can expect Bank of America to be a little bit more of an outperformer over this coming quarter, barring no new government intervention in terms of on the legal front there.
Yeah, absolutely. We're all talking about biotech this morning. We got the news of Celgene acquiring Receptos for $232 a share in cash. It's approximately $7.2 billion. Have you looked at the merger? What are your thoughts on it, and what else are you looking at in biotechnology right now?
Yeah, I mean it continues to be a hot space, a lot of merger acquisition activity. I was talking about Gilead yesterday. It triggered on a bunch of our buy radars here, and Gilead Sciences, GILD, and it was interesting after the Celgene acquisition. A few analysts came out talking about Gilead and possibly buying out INCY. But it just kind of, anytime we've seen one of these mergers in the biotech space, we just see buying across the board. Gilead's my favorite. It finally pulled back. It was, just on a massive run May and June. Finally pulled back here on very, very light volume, so not a lot of enthusiasm to sell. There's not much I can do with Celgene here at this point or in that acquisition. I normally don't want to get involved trade-wise with those. But Gilead Sciences, in terms of some exposure there and something that has significant upside here to it.
Netflix has its 7-for-1 stock split. Are you looking at that at all today?
I am. I'll admit I'm looking for puts on Netflix. We've had a lot of analyst upgrades on it. We will have the earnings here, but a lot of times we'll see kind of a general split cycle as a stock will run up into the split, and then once it splits, there's just the part of the investor community out there that thinks they now have more, and so they sell. And we see generally when we see splits, we'll see kind of a bleed for a few months after the split. I don't want to short it ahead of the earnings, but it's something where if we see some sort of earnings pop, I think it's a very interesting place to set up some puts on Netflix, just simply playing for the kind of overcooked aspect here. You do have some activist investors who've been talking about selling shares and whatnot. But I do think kind of this post-split provides a nice opportunity to be a seller and maybe sets up much better for puts if we get some sort of Netflix earnings pop here tonight.
What about Google? We're all also going to see their earnings report this week, but we were talking about on the show earlier where I don't think we've seen a beat from Google in like 8 or 9 quarters.
No, they've struggled. I mean,
Right.
they've really struggled. But we're finally this week and even a little last week, we're seeing some outperformance from Google versus the S&P.
Okay.
And we haven't seen that for quite some time.
Right.
And so when we start to see something like that, it kind of, hey, what's going on? Now there's some potential deals with Yahoo, and they got their fingers in so many pots here. But one of the interesting things is while they've been kind of missing or struggling quarter by quarter, in the stock's where it was in the end of 2013, it's kind of been in this major consolidation between 500 and 600 over the last 2 years. And a halfway decent quarter out of Google can be a major breakout, sending this thing up, another 150 points here. And, if we get that type of report, I think, that type of move is very, very likely. And given some of its outperformance here of late on the S&P, tells me, hey, investors are expecting a beat to come, and they're expecting some sort of breakout action finally here in Google.
What about Fitbit? Not sure if you follow IPOs. I know some people, don't even like to touch them for the first 6 months, and there are others
Sure.
out there saying that they're thinking it's going to be like GoPro, where there's a ton of just hype going into the IPO and shortly after. I think Fitbit actually did make a new all-time high yesterday as well. Have you been trading this, or you're just kind of like, meh, not really?
Yeah, I haven't been trading it. I've been following. I'm very curious, but when it comes to these IPOs, to me, to trade them becomes very difficult because they can be very random. But to me, it comes down, if you want to be a buyer of them, you basically buy them and use a stop on the prior week's low. And that's not exactly a tight stop,
Sure.
but, these things are going to be big movers overall. And so something like Fitbit, putting a stop on Monday's low here around 42.5, trading it higher off that point, I can't argue with. But if it's now been trading, 5 weeks, somewhere around there. If this week's lows get wiped out next week or the week after, I think that's the point where you have to say, you know what, the selling's probably ready to hit in. But for now, the IPO excitement remains.
We've been on the line with Jeff Yaede. He's the founder and lead trader of TraderMinute. Jeff, thank you so much for joining us this morning. We always appreciate to hear your thoughts on the market.
Thanks, Brianna. Have a great one.
All right.